Hello, everyone. Yeah, I sold all my positions and went into cash yesterday. Looks like I'm getting lucky with it because semis are pulling back today, as well as the general market. Gold and silver shorts are the ones that I think I should take. Although I decided to wait for the 150 EMA to and the 50 EMA to come a little bit closer. But I think in hindsight, maybe I should take this short. And given the fact that the market is moving faster now, maybe it's not going to build a longer base before the crackdown. And yesterday is a I think yeah, I can manage my risk pretty easily. Or maybe actually today early, I think I'm not on the screen. I think this is early morning in Hong Kong time. Yeah, oil is breaking out. And now it's back in the 100 level. And the previous resistance 102. So ARK is also putting back into the weekly 21 and 9 EMA. I think the weekly 21 or 9 EMA, I think it's probably the 21 EMA on the daily too, or the 50. Yeah, 21 EMA and the 150 EMA on the daily charts is a important level to watch. Semi ETF is pulling back into the 9 EMA. And I think we will have a high chance to find support at the 9 EMA. Fastly yesterday is showing some relative strength. Like I really like this touch on the 50 EMA, and then a strong reclaim into the upside. A bullish engulfing candle, and some Space names are finding support. ONDS and Rocket Lab are finding support yesterday too. And the software names are also the leading ones right now. AMD on the 9 EMA could be also a watch, could be also a potential buy. And BMRL is for the short side, but today is gapping down, so probably not gonna take it. IWM is also pulling back into the daily 9 EMA, hopefully, or the hourly 50 EMA. That is also a good support level. ARM is gapping down into the 9 EMA too. Hopefully we can go a little bit lower. I think today could be a good day to buy the dip. The first pullback into the 9 EMA after a strong uptrend. fast is breaking out. think I've finished trading today. I think that's probably it. I would love to get into the cybersecurity names. Net and CrowdStrike. PanW is a little bit slower, but I think the weekly is a little bit weaker. But they didn't pull back to the daily 9. They're still only pulling back into the 60-minute 9 EMA only. I want them to have at least pull back to the 207 around 207 level for better entry. I think maybe the 21 EMA on the 60-minute chart and the previous highs, I think will be a better entry, but they're too strong today. And I'm pretty sure there will be more entries in the coming days, I believe. Because this is only the first pullback, I think. Actually, not. The IWM is still within this this bull flag. So it is possible to see a stronger or a deeper pullback, like maybe undercut the 9 EMA in the coming days before the starting another leg up. Rare Earth, yes, but I missed the entry on CRML yesterday. Oh, today is gapping down. This space UMY is also looks really nice. The textbook VCP now looks like it's breaking out. And today I think this pullback into the 9 EMA is a good entry. But yeah, now it's already up 3%. bull is also building a pretty decent flag, but it's a little bit liquid. Oh, I got stopped out. Unhappiest. Got stopped out from Fastly too. IWM is tanking, but it's coming into the 60-minute 50 EMA. Even though I got stopped out, but I'm still looking for the potential pullback buys in the at the 9 EMA, especially the IWM 9 EMA and the semi ETF 9 EMA. Corning is now down 4%, and is from down 10% at the open. Found support on this 150 gap level and the previous highs as well. Maybe a breakout on AOI tomorrow is a play. A breakout and the reclaim of the 9 EMA. Uh, why so bullish on Nebius? Nebius is now at the prior prior highs, like it is the high of the previous base, the 6 month base. So now it's slightly below the 21 EMA. Um, I think it's still valid for for a pullback buy. It's not like down in the middle between the 50 and 21 EMA. So if Nebius can regain the strength late day and then hopefully close above the 21, then it would be a really nice um bullish candle, or a good, a possible first higher low since this uptrend. And it's at the anchor free web on this swing low. So multiple support levels, and this one in the strongest sector right now, semis or AI. That's why I keep trying to focus on those stocks. Net is trading at 700 million, but why why is this look so illiquid? Why does it look so illiquid? Like the one is on the New York Stock Exchange, maybe. Nebius earnings tomorrow. No, I think it's on the May 18th. refer to the Nasdaq exchange website. This is incorrect. Why are you not gonna check out on ONDS? I did. I got stopped out and then I just re-enter it. Am I still using 0.35% per trade? Yes. Around 0.3 to 0.4. Sometimes maybe less than 0.3 because the stop maybe uh, is less than 1%, but I don't want my positions to get really big. I normally limit the maximum sizing to around 30 to 35%. So sometimes I'll be risking less. Okay, I stopped out from ONTS again. Have I ever studied the anchor volume profile? Not really. But I know it is something similar to the anchor VWAP. How often do I adjust the risk from the total dollar amount? Um, Generally, uh, if I'm doing quite good, so like my equity curve keeps going higher, so I would you I would use 90% of my equity on that day to calculate my new position size. So let's say I double my account from 10K to 20K in a month, and like I'm still holding some of the winning positions, and I wanted to enter the new positions. Then generally I would use maybe 10 or maybe 20% discount in my uh current current account size, because uh if you're I think it's better to control the drawdown. And most of the time when you're doing after a really good period, you're definitely gonna get some pullbacks or even a correction afterwards. And if you are sizing your positions too too large, too huge, then sometimes your losses will be a little bit larger than expected. What's what's my average win loss win rate year to date? I don't have the numbers, and I personally I think those numbers are not important to my decision making, or simply like evaluation process. YIONQ, strongest stock in quantum sector. Pull back into the 9 EMA. Yesterday I think I like this undercutting reclaim on the 9 EMA and also found support at the previous swing highs. If there's a breakout in the coming days, I think it worth the. I think the risk reward here could be huge. Yep, yes, got stopped out again. Maybe things are getting a bit weak. We may see a deeper pullback. And quantums, I think it can go both ways. So, like if this IONQ long is stops me out, then maybe it's better to switch the focus on the short side. Is there a time I learned the tight stop loss from Chris? Yes. I really tightened my stop from more than 5% to around 3%. after coming across the streams from Christian. And how do I overcome the mental from being stopped out all the time? I think I'm just 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 need to get used to it. I I didn't do anything special or different from others. Just maybe close this arm early. Did I see the new Porter Jones interview? Not yet. Think I'm going to watch it. How do I deal with the overnight gap down like today? Just wait for the market open and let your stop loss order to trigger. A gap down like today is not happening that often, and it's part of the game because sometimes you can also get the gap up. So will markets turning to the downside? Not sure how far it can get in the short run, but I am still pretty bullish in the medium run. I think a pullback into the 21 EMA is also is expected. It's very possible. 9 EMA uh is the stronger scenario, But if we get a pullback into the 21, is also it's actually healthy for the uptrend compared to the lockout rally in the previous weeks. How did I overcome the mental frustration? When I face huge profit drawdown, I don't think I can overcome it. I will still feel a little bit frustrated when I see the decline in my equity curve from the peak equity. I think it's important to realize, like Christian always, I think he emphasized a point that is really important is you are in a drawdown most of the time in trading. Most of the time you're in a drawdown. Maybe not most of the time, but like a lot of the time. I remember he pulled out an Nvidia chart and one of the biggest winners in the recent decades. So Nvidia is in the drawdown from 2002 to 2006, and in the drawdown from 2007 to 2016, and also this 2-year drawdown. This one also 2-year drawdown. And the past 6 months also. But this is one of the largest movers, biggest movers in the past decade. And like drawdown in profits, like is actually great because you are having the profits, you are gaining the profits, you're not losing your original capital. And if you trade, you just can't avoid the drawdowns. no one could could stay in the all-time highs equity curve forever. But you can strike the balance between holding your winners, like selling to strength and selling into weakness. So if you are a type of people of a trader who like you will be really frustrated when you're seeing your profits to get stripped away, then maybe you can sell more into strength, and you need to accept the fact that selling more into strength will means you will lose your potential upside. So maybe if you hold the larger positions and trail it for a longer time, then you may have a higher potential gain and a potential peak equity compared to selling more into strength. So it's really about striking a balance and knowing what type of trader you are. Dwindling on the drawdown could be dangerous, especially when you're up huge and then you got a 10 or 20% drawdown from the peak, from the high. And if you're if you cannot get away with it and keep like you're trying to um earn back your drawdown as soon as possible, then it could potentially like ruin your whole performance, like giving up most of your profits because you're pushing it at the wrong time. So I think today, like I got stopped out from like I think more than 5 positions today, and I think it's time to really take a step back. At the market, I think the market is trying to tell me should trade less. I think for the coming days, at least, like for this week, probably. If yeah, maybe the kills 9 EMA on the kills. But I think it's no rush, and I don't like some some breakdowns are really kind of a changing character. So but this candle from CLS is so ugly. This gap down from Rampus is also disgusting. And given the fact that semis has been up, I think 100%, more than 200% since the, I think this is the um Liberation Day low. We could see a longer a deeper pullback or a longer base if this is not the end of this uptrend. Yeah, I've been on the similar occasions that I want to make my losses back, but at the wrong time. I, I think I shared it on the first Trader Line interview, 2024. And I know I shouldn't do it. Like many traders share their insights or experience on the books or on the podcast or interviews, and you know you shouldn't do it. But I think most of us, or maybe me, like I can only learn from my own setbacks or experience. Like you have to experience it yourself, and you can feel the pain. You can go through the all the mental processes like this, the tilt, the frustration or the anger or all those emotions running in your brain. how did I like Germany during my exchange? Germany is the first European country that I ever visited, and Europe is so different to Hong Kong. Hong Kong is so busy, so hectic. The pace is too fast, and Europe is compared to Hong Kong is definitely much slower. And I think I'm the guy who loves a slower pace and also the nature as well. My I think that my favorite thing about Germany is the Berliner, the donut. That's the best donuts that I've ever ate. And they're so cheap, so affordable. CRML? Delayed EP, do you think? Still have enough fuel. I really don't know. Like, do I does it still have enough fuel to the upside? Don't think anyone has the answer, but I think it really depends on the market. Yeah, and actually, I think it looks pretty good today. Really wanted to like to consolidate for at least today, and hopefully can play this maybe a breakout with the when the market can find support at the 9 EMA or maybe anywhere, but I think yesterday is the best entry. Now it's a little bit risky to buy it. Yeah, as the market is pulling back and not sure whether but IWM is active 9 EMA now. Yeah, maybe worth a try. even on this 15-minute breakout. Martin, could you please briefly describe the question before answering it? Yeah, sure, okay. I I've been to Hamburg. I actually visited Hamburg, and when I when I was there on exchange, I went to the submarine museum. And I went to the Stats Park, like I think the huge park in Hamburg. I only stayed there for one night, I think. Let's see what the oil can hold up above 100 level. After showing some distribution at around 102, and it's like previous highs. How did I manage to get out of the 50% drawdown? Oh, I think I definitely get lucky because the market improves in I think it's 2024. Like since this higher low on September, the market gets stronger, and I think there are a lot of long opportunities. I think it's easier to trade compared to the previous 2 months. If I would do it differently, I just don't get the 50% drawdown. No, I think that 50% drawdown is really early back in 2021, but I got a 35% drawdown in 2024. Do I speak Deutsch? 9. Do I get 35% drawdown when I'm risking only 0.5% per trade? Back then uh I'm not using 0.5%. Like that straightly. Sometimes I will risk in more, and I believe when I'm in drawdown, I even increase my risk per trade because I want to make back my losses as fast as possible. Then I use a higher risk, a larger positions, and trying to make the losses back. And then I get a 35% drawdown. So I think I stressed this multiple times that you when you're in a drawdown, you should really reduce your risk, your position sizing, and you should never ever increase the size to try to revenge trade and try to take out from your hole by risking more. It's really dangerous, and you could be in a vicious cycle or a loop that you could that, that get completely blown up. Nvidia is really strong, especially yesterday. It pushes to the all-time highs. I prefer a few more days to tighten it a little bit for the general market. Now it's the volatility starts picking up. SKYT. Not sure about this one. This is a small cap and illiquid names. The chart doesn't look that correlates with other with the semis names or other AI's names or any sectors. So I don't know. Weekly chart looks pretty decent. So if this chart if this is a maybe a 10 billion market cap stock, then I think it looks great. Like it could be a good candidate to focus on. One thing we'd like to uh, a small reminder is when you next time when you're trying to ask for any opinions on the ticker, maybe you can describe a little bit on what's on the background or anything special about it, because if you're just like typing a ticker in the chat, I don't know whether you are long or short or you are already in a position or not. Like where's your entry? While looking for pullback or a breakout. Hi Mon, why does it feel like your trades today differ quite a bit from the setups at Share or Trader Lion? Uh, I've, I think this is a good question. Right now, I'm really focused less on the setups or the patterns, more on the on the first one is the theme side, and another one is maybe the general market. Like my idea was to play the bounce into the 9 EMA, a bounce from the 9 EMA. And maybe today was is a bit too early, so I think the entry today was it's not it's actually not that good. Maybe. I think I also kind of recognize that my style um is drifting into the a more discretionary, because sometimes, especially when you're looking back last year, a lot of the stocks are not giving that like not really that not really that much of a high type flex or really tight range breakout. So for example, maybe Marvel, how can you buy a tight range breakout when it's going up in a 90 degrees? And I I think the market keeps changing, and sometimes some style of entries are working better. Sometimes they don't, and another style works better. Like maybe pullbacks versus breakouts. Around what percentage of my profits so far this year is from the long side? Uh, I don't have an exact number, but it's definitely more than half, more than 50%. What are my biggest long trades so far? Not sure about that. I believe it's Marvel. I don't know. Yeah, MRVL. Are you still doing journal now? I only record my trades, like my buys, my entries and exits. Occasionally, um, I would write like on a specific trade or a specific market events. Qualcomm AR and AMDs are extended and I bought them today. Why not? Let's settle down a bit. Mm, I think sometimes when the market is like moving through really fast, maybe I think every dip could be an opportunity to buy, or maybe even the only opportunity. And I think with a tight stop and a low risk per trade, I think it's okay to try. So I don't really know should whether this thing could potentially bounce right back into the highs, or maybe do us like holding or chopping around the EMAs before another leg up, or maybe even another leg down. But this is the first pullback after the previous trend, and I think it's worth to try to test this out. I think the character of the market plays a huge role here. The past 1 to 2 years are the stocks are moving so fast, and sometimes you miss the 1 or 2 day of a pullback, and then it just lifts off and not getting back again. But today's so market looks like it's not that strong, showing a bit of weakness, and so the losses are kind of showing me that maybe the market wants to slow down a bit. Do I sometimes buy leverage single name like leverage ETF? Um, um, I don't. I'm not a fan of them because like they are sometimes they're getting too volatile, and especially on the first few days after the entries, maybe you will get shaken out when you buy the leverage ETFs, but actually you're not getting stopped out if you buy the original stocks, because that's what the leverage ETFs do, and and I really want to keep my stop tight, so a leverage ETF won't. It's really difficult to limit my stop below 2%. But I think of course I can like reduce my position size to adjust it to based on my stop, and it can free up my buying power a bit, but I'm just not a fan of it. When I study or read charts, do I consciously categorize or interpret each setups? I think in the earlier stage I do, so I will really look for the maybe like for breakouts, looking for the tight range such as this one AMD back in 2021. So it's a really I think a really great breakout, really good. I don't know, is there a name for this breakout? Like but this is definitely a good one without the shakeouts. So it's like the low of day really works really well. And but uh, gradually I kind of changed my focus a bit and trying to find out whether like what what could be the potential entries with with a tight stop. Like I think that's my approach. Sometimes I would I'm not sure. Like for example, this AMD, I think I mean this day could be a possible entry because they like the EMAs are tighten up. And this is the shakeout at the 50 EMA. Or maybe back here. So after a pullback and AMD starts riding the 9 EMAs up, so it touches the 9 EMA several times and keep found support. Eventually it breaks out, and although not much follow through, and it's actually something similar to what the market did on the previous pullback, but this is much shorter, and the dips are getting like this is undercuts the 9 EMA. But I think the similar sense. So after a pullback, when I think finding support at the rising 9 EMA could be a bullish sign, and I think this is you could easily manage the risk there. And you can also see some counter examples because like something this bounce back above the 9 EMA. Let's say it's not perfect example, but let's say you put it on this day, like it found support above the 9 EMA, and then it gradually loses the 9 EMA, and that's the follow through to the downside. And it actually shows that this entry could be is a good one because when you get stopped out, it is not going into your regional directions, so it is going much lower. So your stops are actually effective. So another one could be here, like after the earnings. This is the after hours earnings, and after the earnings report, this is the pullback into the 21 EMA. And it found support and rips higher. That shows like something, if market is going really fast, if you miss this one, then you would miss the whole run to the upside. And this example could like sometimes like Are there any similar examples to this one? Maybe Marvel, this Marvel? But this one also only pulls back to the 9 EMA. Not sure about it, but this I would say it just gives me an idea that after the previous day is a red day and followed by gap up, a pullback in onto a pullback of the gap up day could be a buy, like instead of selling it or just uh avoiding it, but it could be a buy because one thing is similar, isn't it? It pulls back to the 50 EMA after the base. Mm, maybe not really that similar, but AMD here definitely like gives me an idea that it could be a buy opportunity when seeing a pullback after a gap up. I think that's the main takeaway. So if you're seeing a fade after the opening range, maybe an opening range breakdown, you should keep watching it. So gonna sit out a bit and maybe wait for the reaction on the 9 EMA on kills. So that's it for today. Thank you guys for coming, and see you in the next one.